All right, so we're going to move on right now and take a look at the analysis for the stock market. Before we do that, there's some important information. Make sure that you read this slide. It tells you about how our approach to the market looks at some very specific mechanical ways that we do our analysis and how you can use that analysis for yourself with the very important aspect of owning your own trade. Once again, level 4 top tier final weekend. Earlier in the show, Matt gave details on this. So there's only a few more days. You can get 35% off for level 4. It includes level 3, 2, and 1. Everything that we bring, amazing content and education, 35% off. It's only $101.25 per month for 3 months, regular $159 a month. So go to the top, askSlim.com, and then click on that level 4 special offer. Get 35% off. You can get more information there, or write Matt at askSlim.com. All right, stock market analysis. I'm going to look at multiple time frame analysis and projections of the S&P 500, the NASDAQ, the Russell. I think I'll also take a peek at the VIX because a lot of people like to see that. This is what the charts look like when I send it off to the members, level 4 members, where they get this live on the Thinkorswim platform. For everybody else who may be interested, this is our futures hub. And what this is it looks at the analysis of all the futures that we do analysis on. They're colored based on the cycle conditions. And what's important is that, I bring you this analysis and it shows you what our cycle analysis is. You can get that as it's updated all the time. And every time I do updates throughout the week, I give you my most notables, and it tells you what my opinions are in each of these right there, as you see there, on the stock indexes or the treasuries or the currencies, all of those. As I update them, as I update the charts, I update the most notable, so you get a good sense for my opinion. So I wanted to show you that this is our futures charts hub, available for level 3 and 4 members. This is included if you take the level 4 special that we're running right now. So just wanted to show you that because a lot of people wait for our updates in between these shows because you're not premium members, and this is a good way to become a premium member and to get those updates all of the time. Here's the S&P 500. Now, S&P 500 looks to me like it's making a double top. Now, it's not really broken enough to be sure about that, and it's going to take some time for us to know whether or not that really is a double top. The period of risk that we saw was September through November. I thought maybe it would be mid-September or something like that period of risk really comes in. But there's a lot of selling coming in, and we have a lot of volatility right in this period. This left a hanging man on the monthly chart, and that hanging man is a sign of a market peak. That happens very rarely. There was 2 hanging men that occurred in the monthly chart in 2000, just before, as the market was peaking, and 1 in 2007. So it's very rare. In this case, what we're seeing here is this big decline, the big rally, another decline. All of this is an unhealthy market that we see. And I think it's making a very, very important peak, but the peak I'm not sure is in yet. First of all, momentum in here is still moving up. It's been volatile, but it's still moving up, even though we have this big downside bar. One big downside bar doesn't make the peak. Here, as you can see, the half cycle right in here. We were looking for a bottom here in the first week of August and got it right on time. We were looking for a rally. It went further than I expected that it would, but now pulling back. Again, this window of time right over here is out in, let's just call it right around November 1st through out over here December 1st. This is where we expect that the trough is going to come from this market, and it could get easily back down to these lows in here. This low right there was 51.14. And this low right over here is 48.35. It could go that low sometime between now and December. We do not know how the market's going to act around the election. I think it's going to be very nervous around the election, but I'm biased by what I see here in the pattern. So the S&P 500 looking to me like it's making a double top. We don't have proof of that yet. What will give me proof? So here's your daily chart right over here. This has been really pretty. I mean, it rallied up further than I expected, but still the shape of the pattern and the timing of the pattern is really right on. And you can see in the bottom the option bias study, which shows you how to keep your option biases, your positions biased. And it's been green through all of this time period because it's affected by that conditions on the longer term, which are still positive. So it's saying to me that while if you had a long side bias on your option position in this last week, you probably didn't do well, but we knew this was going to be a corrective period right in here. So based on the cycle rhythm, you could have stayed out of trouble. Also, I said that this cycle has high odds of being the first daily cycle of the new minor rising phase of the weekly cycle. What does all that gibberish mean? It means that this would end up higher than it began as the first cycle in this minor cycle right over here on the weekly. So our members were very, very informed about that. And I said a negative configuration would be very bearish, but this is actually a positive configuration. So where do we go from here? Well, somewhere in here, we're going to make a bottom. I don't know if it's today or if it's a few days from now. I can't really tell that right now. So the choices are that the highest probability would be that this would come up again and test the highs right over here. And then we get into the period of risk right over here. And that would be where we would see the beginning of the market moving down into that period of risk in October. This is the highest probability shape of what we're likely to get. The only thing is that if this market stays weak, and it comes up into the resistance area right over here, which I don't have in there yet, but somewhere right in here, and then turns down and then takes out whatever low it makes right here, I will know that the market has peaked because we look at the shape of these cycles to be able to tell us the market condition. That will say to me the double top we're looking at here is correct and the period of risk has already started. So I don't really know that. And you heard Katie refer also to the fact that we're expecting the market to move up in this time frame right over here. That's this cycle right over here, expecting a bottom to form and the market to try the upside. Cyclically, when I look at this, the shape says to me it will try to test the high. My gut tells me, based on what I'm seeing in the markets, it has a decent probability of failing in the resistance once we put it in here and then turning down again. I don't know which of those is going to happen. We're agnostic. We let the markets tell us. Right now, we're going to look at the probability of a low being formed here in the next few days and an attempted rally coming out over here into the next 1 or 2 weeks on the upside. If the market continues to fail in these next few days and then breaks under here under the 61.8 or even gets down here to the 78.6, this price level over here is 53.22. This price level here is 52.28. If those get tested, well, then I'm going to really have a better feeling that we're in for a failure in the next rally. If it stops in this area where it is right now, then the odds are pretty good that it's going to try to get up higher near those highs over there, and the double top is still in question. Let's take a look here at at 6 months of momentum conditions, as you could see, and the slim ribbon PO on the bottom. We had some signals right in here that the market was likely to try the upside again, and it did, as you see, but it could not hold in there. And what happened was that it began to turn over, and now it has turned neutral. As you can see right over there, this is the slim ribbon. This is an area chart version of the slim ribbon. An extremely valuable chart. When you look at the slim ribbon PO on the bottom, the combination of these really gives you a good sense of what's going on. And here you could see that the momentum has now gone from positive to neutral right now. And when you look at the 2-hour chart, well, there's a ton of clarity in here. What I love about the 2-hour chart is that if you are an intraday trader, if you're a swing trader that trades the big swings during the day, or if you're a let's say a short-term swing trader, you carry positions for like 2-3 days, or short-term option trades for a few days. This is a fantastic way for you to, number one, how do you bias your positions? Number two is, what is your position sizing? So if you're making a trade that's against one of these the momentum conditions in here, your position sizing should be really small. You can see in here where it turned down right over here, which was on 9.3, and gave you this negative momentum, that it was telling you, you know, if you're going on the long side, you've got problems if you're a real short-term trader. Use this for a guide, both in how you bias your short-term positions and in how you size your positions if you're going against the market. If you're going with the market and all of this looks positive with everything else, then you're going to load it up on the long side. If it looks negative with everything else, you're going to load it up on the downside. If you're fading this, you've got to be extremely careful if you're a short-term trader. So a lot of value there when you look at that 2-hour chart. Let's switch over to the NASDAQ right now. And you see these arrows. I'm just hitting these arrows to help me move through these charts. As you can see, it's a fantastic setup here. So easy to do. Here's your NASDAQ. As you can see, it's also has the same similar pattern as the half cycle right over here, made the bottom right on time. This broke underneath the support. It trapped me. I'll say it once again. The team warned me that this could be a fake out and I should pay attention to that. And they were right. But now you could see as it moved up here, this is weaker than the S&P 500. As the AI leaders, there's no more leaders in this market on the upside. If anything, there's leaders on the downside. They failed. The NASDAQ failed here in the resistance sell zones right in here, and then turned down again. Again, we're pointing to the downside. I think it's a high probability that out sometime here in November to December, we're going to see us at 16,800 approximately, with an outside chance here at 15,700. Here's that period of risk right in there, and a failure in that sell zone. Momentum stayed negative, as you could see here. Remember the negative, remember the positive momentum in the S&P 500. It's negative in here, and it has stayed negative even through this rally, which was a pretty good warning. Here's your daily chart. You could see the formation in here. This one did test the 61.8. Beautiful shape in there. Again, what I'll learn a lot by what's coming out and what's coming next in here is this next rally right in here that's due to start in the next several days. Is that going to get up and test this level? When you get down to the 61.8, it's less odds that it's going to do that, but still could do that. I'd make it 60% that it's going to get up here and test this level. But again, if it rallies and then hits the resistances, which I'll have in here for members, and then turns down again, then it's going to set up a very, very negative condition. Again, you can see in here that the option bias indicator is influenced by the longer term that we've seen, and it's not giving us any kind of a, well, what are we getting in here? I have that wrong. So let me just take that out. It's giving you all of these yellows. They're hard to see, which is just all went to neutral way, way back over here and said that, well, these conditions are now neutral. Look at when you get an orange dot in here, which sometimes it disappears, but it warns us, then it sets the low, and that was really nice to see that. A good signal of a bottom in there. As you can see, you've turned negative here in the momentum in the NASDAQ. And again, you get this help on this 2-hour chart. And on the bottom here is the market condition indicator. When it crosses under the -25, it gives you a negative signal. And you can see that's what happened right in here, negative signal. This says keep your positions, your short-term positions, on the short side. And let's take a look at the Russell. The Russell, again, when interest rates started to fall, small caps really started to rally. And this gave you a sharp upside move. but now failing in a pretty big way from that resistance level right over there. And again, this period, September, November, a period of risk. Expect this to get down to around 1968 with the potential of getting over here to 1887. Those are the downside targets for this period into November, into this election time. And you can see this evening star forming there, this big engulfing that formed right there. I don't think small caps are going to lead this market to the upside anymore. Here's your formation, and here it gets also down to the 61.8%. It's the same story. We will find out whether or not this has enough buying in here with the interest rates coming down to get up and test this level. I'm feeling some doubts about it just as a gut feel, but mechanically the expectation is that it will test this level because this is a positive configuration right in here. Sometimes you get positive configurations that test the 61.8 that fail and get up into resistance and then come down again. That's about 40% of the time. So we're looking at about 3 to 2 that it's likely to be still positive. Looking at this and this potential decent rally coming in these indexes. So that's a look at the Russell. You can see the neutral conditions now on the daily momentum. And again, the same thing on this 2-hour chart. This 2-hour chart is so important, again, if you're a short-term trader, to really get a sense for conditions. You can even put it up for all, put up 4 charts, 4 quads on a chart, and put up all 4 of these indexes and put up these 2-hour charts, and you'll really get a good sense for the strength and weakness in the individual indexes. If you're a pair trader, you want to buy the strong ones and sell the weak ones, which is always what I say you should be doing. So there's your S&P 500 again, and this toppy conditions that we see in here. I want to switch over right now and look at the VIX. I'm going to bring the VIX chart in right over here and blow it up. So what we see in here is that we had this massive move up to 65 in the VIX and applied volatilities. And what we expected was, based on the short term right in here, is that when this daily cycle bottomed right in there, that we would get another move up in implied volatilities or a move down in stocks that aligned with the corrective period we saw in the indexes that I just showed you. Spot on, worked absolutely perfectly. And now the way this looks to me is that if you look at the dates right in here, this says sink trough in mid-October. This says sink trough in mid-October. What that says is that the market is likely to be trying the upside sometime into September and then again into October. And then here in mid-October is where there's some potential for the stock market to get really slapped. That's this right over here also, and for implied volatilities to really jump. I think what this is telling me is that we can expect a lot of choppy action between now and sometime mid-October, and then mid-October through sometime maybe mid-late November, some potential very big move to the upside in IVs and very good size move to the downside in the stock market. One more chart we're going to look at in here is the monthly on the VIX. I usually don't show these, but they're just so important. And that is, we said that this period right in here where these cycles were bottoming, were going to bring us the beginning of a period that will last for a very long time of elevated implied volatilities. This goes all the way back here to, well, I can go all the way back here to 1990, where these cycles really started to line up. And this is just the beginning in here. And, I've come out pretty bearish right now early in the show, and thinking that the market's going to have a pretty hard time making higher ground valuations and a lot of reasons. And I think that what we're looking at in here is many, many months of a lot of volatility in the market, and not a likelihood that we're going to see significant new highs in the stock market at all. I commented in the beginning of the show that there were a lot of analysts out there that are talking about 6,000 on the S&P 500, even 7,000 one analyst is talking about. I think they're completely wrong. I think that the outside is, if we really get a solid move coming, we could get to sometime in the next month, if these rally phases really turn out to be good, maybe 5,800 on the S&P 500, but my gut tells me no, and that we're going to try to get up and we're going to see market failures. Mechanically, things look to me like there's still decent upside attempts coming, and we're going to respect that. When I talked about in the beginning of the show about the tops that have formed, looking at monthly hanging men charts earlier in the show, I mentioned that 2000, 2007 had those. They still took months to form those tops, and bull market tops take months to form. They just don't usually have V tops like we see V bottoms. And that's why I think we're going to see a lot of wide swings and choppy action for months to come, with some significant risk to the downside. Again, I'm making the risk rewards maybe 3% up and over 20% down. That's pretty bearish.